This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices eased on Tuesday as investor disappointment over China's latest stimulus plan and oversupply concerns weighed on the market, along with a stronger dollar. Brent crude futures fell 17 cents, or 0.2%, to $71.66 a barrel, by 0550 GMT. U.S. West Texas Intermediate crude futures were at $67.84 a barrel, down 20 cents or 0.3%. Both contracts had fallen by more than 5% over the previous two trading sessions. China unveiled a 10 trillion yuan, $1.4 trillion, debt package on Friday to ease local government financing strains, as the world's biggest oil importer faces fresh pressure from the re-election of Donald Trump as U.S. president.
U.S. exports of crude oil to China, the world's top oil importer, have rebounded in October from their lowest levels since 2020 amid weak Chinese fuel demand and refinery profits, but the outlook for growth in exports is glum, according to ship tracking service Capella on Monday. China's monthly imports of crude from the world's top producer hit 24,000 barrels per day, BPD, in August, the lowest level since February 2020 when COVID-19 slashed demand. They have rebounded to about 134,000 and 130,000 barrels of oil per day in September and October, respectively, Capella data showed. That, however, is still about half the average of 259,000 barrels of oil per day in 2023, and weak Chinese demand has helped to reduce U.S. exports to Asia to a three-year low in October of 955,000 barrels of oil per day.
Moving on to the top news in the energy sector.
Indonesia plans to offer to international investors opportunities to build 75 gigawatts (GW) of renewable power in the country in the next 15 years, its climate envoy said on the sidelines of the COP29 summit. The plan is a commitment by Prabowo Subianto, who took office last month as the president of Indonesia, said Hashim Jojo Adikusumo, Prabowo's brother and Indonesia's envoy to the 2024 United Nations Climate Change Conference in Baku, Azerbaijan. Indonesia, one of the world's biggest greenhouse gas emitters, has pledged to reach carbon neutrality by 2060, including by phasing out coal-fired power plants and replacing them with renewables.
The Japanese government is planning to continue gasoline subsidies next year with phased-in reductions, the Nikkei newspaper said on Tuesday. In a draft economic stimulus plan, the subsidies will continue in 2025, but upper price limits for consumers will be raised from about 175 yen, $1.14 per liter to 185 yen, Nikkei said. The government decided in June to extend gasoline subsidies until the end of the year and to temporarily reintroduce relief on utility bills over the summer. Next, we have the top news in metal markets. Iron ore futures prices traded within a narrow range on Tuesday as investors assessed a slew of softer economic data in China, after the top consumers' latest stimulus measures underwhelmed and took the wind out of markets in the previous session. The most traded January iron ore contract on China's Dalian Commodity Exchange traded 0.07% lower at 763 yuan and 50 fen, $105.58, a metric ton, as of 0250 GMT. The contract had slumped by as much as 3.5% to a two-week low of 754 yuan in the previous session.
Gold fell on Tuesday to its lowest in nearly 2 months, weighed down by a stronger dollar, while investors awaited a set of key U.S. economic data and comments from Federal Reserve officials for further clarity on the interest rate trajectory. Spot gold fell 0.9% to $2,597.91 per ounce by 0747 GMT, hitting its lowest since September 20th. U.S. gold futures fell 0.5% to $2,604.30. Gold has succumbed to the purple patch of the U.S. dollar in the aftermath of the election, said Tim Wartra, chief market analyst at KCM Trade.
We will now look at the top news in the agricultural sector.
Chicago wheat futures slipped on Tuesday towards a two-month low hit on Monday, as a strengthening dollar made U.S. crops less competitive and forecasts for more rain in the dry U.S. plains improved the outlook for crop production. Soybean futures dipped as a rally in soy oil prices faltered, while corn inched higher. The most active wheat contract on the Chicago Board of Trade was down 0.1% at $5.64 minus 3/4 a bushel, as of 0313 GMT, after falling to a low of $5.52 on Monday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.